So we're going to talk about the effect of time decay, otherwise known as theta, on the long call strategy. So just a very quick reminder of what theta is. It's the rate of decay in the time value of an option. So remember, options are time wasting assets. The value of them erode as each day passes between the time you purchase them and between expiry. And the time value of that option decaying every day is actually working against you. So remember, theta has a negative effect for you. When you own call options, theta is working against you. So let's look up here at the option chain here for SPY. We're looking at the call options, and we're looking at two different expiries. We're looking at May the 27th and January the 20th for 2017. And you can see we've just selected three different strikes here to have a look at. So here's our theta. And you can see, let's use the $208 strike as an example for May. You can see that the theta value is minus 0.0445. So what does that mean? That means that the time value of this option will decay at a rate of 4 cents, roughly 4 cents, 4.5 cents per share per day between now and expiry. So if we move over to the left hand side, you can see the bid and the ask price here for the 208 strike for May is 339 and 347. So if the share price did not move, and if all the other Greeks stayed the same, you would notice that the value of the bid and the ask would drop by 4.5 cents per day. That's what theta does. So it's working against you when you own call options. That's why with the long call strategy, if you are bullish on a stock, we much prefer to use the bull call spread instead, because we're reducing that negative theta that's working against us by doing a bull call spread. Now, the other thing I want to bring to your attention is look at the rate of change in theta for shorter term options versus the longer term options. So we're now looking at the 208 strike for January 2017, and you can see that the theta value is lower. So that's why we're saying to you, if you are going to buy call options, give yourself more time for the trade to work out. And it also works to your advantage because now your theta value is less negative than the shorter term options. So that's the effect of time decay on long calls. The key takeaway for you from this is that theta is working against you when you own call options.